This region around the Great Lakes has been called the heartland. When it comes to agriculture, there's hardly an area in the world that compares.
Everybody, just hold on. I don't know what we're going to have here.
There's a lot of self-proclaimed geniuses out there that know the national yield, but they're all wrong.
Manage money, piling in.
Double digits higher.
So at this point, we're in kind of uncharted territory.
There's a lot of money on the sidelines.
So that was a crazy one.
That's what brings the viewers back. That a boy.
Good morning, everybody. It's Monday, December 1st, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you get any questions or comments, please feel free to drop us a line in the chat area. We'll be sure to get to it during the show. Overnight markets here, December corn down 2.5 at 433. January soybeans were down 4 1/4 at 1133.5. And December Chicago wheat was up 4 at 535. March was down 4.5 at 534, so a little bit lower in the back end. We did get weekly export sales this morning. This would be for the week ending 10/23. Corn sales were solid, 1,805,300. Good solid week on the soybean side as well, 1,449,800. Wheat was in line with estimates, 499,800. Real good sales on the meal side, 640,000 meal. Upper end of the range was looking for 500. And also on the oil side, 29,800. That was above the top end of the range as well. Good morning, guys. Hope everybody had a nice weekend. We're here post first notice day, so we'll get some thoughts there. South American weather appears to have gotten a little bit better. Get some rains moving through there. Some much needed rain as well. So with that, Dustin, maybe kick us off with a few thoughts here as we start the week, and then we'll throw it around the room.
Yeah, thanks, Dan. Yeah, coming out of the holiday, I think we had some post first notice day strength started on Wednesday. Really, I think once I think a lot of that roll happened. So the question is just what's the market setup? Are there a bunch of sellers that are waiting to sell before the end of the year? Mainly talking about growers. We're going to continue to watch South American weather, of course, for direction. But I still think, it's going to come down to cash flow needs. If there's a lot of product that needs to move before the end of the year and right after the first of the year to stop interest, that would probably be the biggest headwind. So far, it's been really, really good, really resilient. If you just look at the balance sheet, I think corn's been acting pretty good, all things considered. I understand demand's really strong. But we have quite a bit more supply than we have demand still. We have a building year here, even with record demand. So I think there's an uphill battle to not have a sizable carryout at the end of the year, unless the yields come in and surprise us once they actually do the first stocks count of the year. So just keeping that in mind, and just for me, it's kind of like assume the worst as a hedger. Make sure you have a floor. Especially for corn. I think that's a big thing for me.
Very good. Justin, first day of the month, coming into, obviously you've said it a number of times, December is kind of an interesting month from a trading perspective. Everybody kind of puts their hands in their pockets and says, okay, well, let's enjoy the holidays and get through the first of the year. But with that, I guess, what are your thoughts here post first notice day?
Yeah, I guess I'm still in the same mindset. Having a few days to reflect on it, just kind of open-minded here. I agree with Dustin. I mean, I think I think corn has found a range, where it's got really good demand, so on breaks you find buyers, and on rallies you have a lot of supply, right? So you find natural sellers, and I think it's just in a range. I think it's hard to make the argument that corn should go make new contract lows. And I think to go sharply higher from here probably doesn't make a ton of sense today. I do think, Safrinha corn crop is going to start coming online here. I think it's starting to right now. currently, I think PNW corn's still cheapest to Asia, out of the U.S. here. But I think you're starting to work into some other areas for Brazil. And beans, the question is how much is China going to buy? Every cargo that they're buying's, $1 plus more expensive to buy it out of the U.S. So I still think I actually think beans probably have the most downside. I guess that's where I disagree a little bit versus corn, just because, Brazil is so much cheaper. So the question is how much is China going to buy at artificially high prices? Again, we've talked about this on the show. The dollars are so small compared to what maybe some of these trade negotiations are that, you can't roll out them just being uneconomical and buying a bunch of U.S. beans, I guess. But just looking at, how when you're $1 cheaper in Brazil, it's hard to get super friendly from here. And I think with more acres coming our way for new crop, I think beans, I would have a floor on everything in beans and be open-minded to, it could still go a bunch higher if they artificially do something, but it's all artificial at this stage.
So your opinion, I mean, like new crop beans, over $11. I mean, with what we know today, feels expensive for what could come down the line.
It just feels risky. I don't know if it's expensive. I mean, I read a bunch of stuff over the weekend, and we've talked about it a lot. Just the cost of everything's gone so high that it's not super lucrative to grow either crop at these prices. So I get the argument that, it's under the cost of production, I think, for a lot of people still, but it's still $1 more expensive than the lowest cost provider, which is Brazil. So yeah, I just think there's risk there. I don't know how this all, I just scratch my head thinking about how you fix this long term. And I don't really know. Whenever you have a country that can outproduce you for cheaper, I don't know how we get out of this. I mean, unless you guys have any good ideas, but I keep thinking about, obviously I've talked a lot about biofuels and, trying to increase, domestic demand, I think is the long-term solution. But we don't seem to be doing that.
Well, and you got to believe if you look at this, trade agreement or whatever you want to call it, they're committed to what, 25 million over the next 3 years. And you got to believe that $1, to your point, Justin, $1 over Brazil or South America. I mean, it's going to be pretty tough for them to get to those numbers.
Yeah.
At some
well,
point,
they
they're
can,
just not going to do it.
Like we talked about, that's, 25 million tons is just kind of a slightly below average number, call it, 5 years ago, 3 years ago. So the rest of the world, unless they have to buy U.S. beans, which they don't, they're going to buy the cheapest bean. So unless you can cut South American production down meaningfully, that's why like a drought would be nice or something like that. But unless you start to subsidize the U.S. grower enough that it is unprofitable for the South American to grow beans at these prices, and they actually start cutting back production, I don't know how you fix it.
So explain that. So what do you mean by that? What would we do over here? You said subsidizing the American.
Well,
government.
just like say you put and I'm not advocating for this, but I'm just saying if you were to create a price floor here, where basically it's like the U.S. just subsidizing production here, to where the Brazilians can't do that or don't have the money to do it, and they are losing money growing beans. Something like that. Let me just basically take what China does for all of manufacturing, right? They subsidize most manufacturing industries to undercut the world, and be the cheapest, supplier of manufacturing jobs, right? Take electric cars, take, all sorts of different products that they subsidize so that they can, basically run competition out. Unless you did something like that, I don't know how you get around it.
But you probably make the argument the Chinese would step in potentially
Exactly.
and subsidize South America depending on where we stand in our relationship with them, right? Because they've invested a lot of money in infrastructure.
Yeah, tens or hundreds of billions of dollars.
Right.
For sure. Yeah, I mean, China basically subsidizes most manufacturing, right? So they can sell things for cheaper than anybody else can, right? And they try to run competition out of business and make that part of their economy. So,
Well,
this isn't something that's going to be fixed,
right,
by our conversations here, but
no, but it does comes full circle to the point you've made before, is got to take low producing ground out here in the United States as well too, right? Like there are some things that need to change, on our side too.
Yeah, I'm not trying to be a Debbie Downer. I just, you talk about, we're on a $2 rally basically from the lows that we were 8 months ago. You look at beans, I just think there's a big risk there.
Yeah.
The best thing that could happen is obviously for right now would be a South America problem.
Yeah.
It looks like the weather maybe got a little bit better, over the weekend, or the outlook did there. So.
Yeah. Well, your point's well taken. I think don't fall asleep here as we go into the new year. If you got bins full, be thinking about it, because there's a lot of things happening here.
Yeah, for sure. I mean, I think we got so cheap and basis got wide and carries got wide, so it incentivized people to store. I just think that a lot of people, store. Now we have this big rally. And it's like, okay, we won. Thank God that's over.
Yeah.
I just don't want to forget about where we came from, and it still sucks, right? For a lot of people, like we're not necessarily like printing money at these levels, right? So I get the hesitation to sell, and I think Dustin's earlier point about corn, for example, that there's a ton of supply. I just think the available supply has been very low because so many people locked the crop away. Now, once those needs get met, we've had a huge book of business on. So, the East has had to bid up basis. You had to do things to get corn to move. But second half of the marketing year, we could be burdensome for corn for sure. Once those needs get met and, the people that did sell sold and all those kinds of things, it could be a different story, come spring, in my opinion.
What do you think about yield revisions for the January report? Obviously, a lot of bull talking point. This yield's still got to come down quite a bit. Just curious what your guys' thoughts are. I wouldn't be surprised for them to lower a few bushels, but I'd be kind of shocked if they got us under a 180 corn yield. But you never know. Yeah, I don't know. What do you think, Justin?
Yeah, I think, to come down a little bit would make sense just because we're so much higher than the previous record. This was actually a good Thanksgiving conversation, with some family talking about this, but yeah, I think it can come down. I think it's just it's such a unique year where we have so many acres out west that usually don't care about that are really good. So mathematically, maybe it's hard to come down as much as people think it could. Like we always talk about, if central Illinois and northern Illinois yields and call it Iowa, you have a good handle on the national. And I think this year's different. So I'll be curious where it ends up personally, but I don't think it's going to be down as much as people want. I don't know what you guys think, but.
Yeah, enough to justify the price movement we've had, maybe. Anecdotally, from talking to our customers, I agree with you. I mean, I think Illinois, Iowa trended more to the disappointing side when it was all said and done. But I haven't heard that from all the other states that we talk about, the fringe states, the northern states, and the western states. I'd say, if anything, they, were as expected, which was record, if not maybe even improved above what they expected. So it's hard. Go ahead.
It's funny because fringe states, you think of like Kansas, like these states have a lot of acres, and we don't really consider them because there's so many dryland acres.
Mm-hmm.
And then when you take, acres like that get 50 bushels above an APH, but they're on 5.5 million acres, right? That's why it's so hard, because you can usually count on the I states, that have 200 and some bushel corn, but this year, maybe you're getting the national yield up by raising the those acres. So it's not the traditional way, usually like, Illinois, like for instance, last year, we had a lot of guys in Illinois that were beating their all-time record by 30 or 40 bushel, right? So this year, maybe they're down, 10 to 15 bushels, and it's the second best they ever had. And then you have growers in Kansas or Nebraska that are, their dryland acres are blown away the record by 30 or 40 or 50 bushels. So just, I don't know, it's just kind of a goofy year. I also get the argument, like if you came and said it's going to be for sure 179, which is better than last year, I don't know how you could argue that either, because it's just so hard to get, all the data that you need to get the national yield. So that's why I'm trying to be open-minded. You could probably convince me either way.
Very good. We've got a minute here, Rylan. We'll talk about livestock. Firmer cash last week in cattle. Obviously, first big significant weather system that moved through the Midwest. And then your hogs broke an 8-week losing streak. So that was good to see as well. Why don't you give us some thoughts as we start the week?
Right. So a little bit of optimism coming into the week. I mean, cash trade on the live side was up to 220 in Texas and Kansas. So, I mean, that would have been $3 higher from last week's average. So I think you're coming in with quite a bit of optimism, but obviously, there's still some caution here just in general, because we're nearing some pretty pivotal price levels, I would say, on the cattle side. We're coming up to some big retracement levels. We've seen this kind of price action before where we get this big, couple day bounce and then it completely fails. So I think got a lot of riding on today overall. I mean, like I said, I think there is some cautious optimism here. Just overall, we got kind of that seasonal bottom on Friday for February. You've got some large open interest put strikes that are pretty deep in the money here at the 220 level for December coming up here on Friday. So it just seems like there's going to be a lot of focus on that 220 level, overall by the end of the week. So we'll see if we see some follow through here today. Otherwise, it seems like short covering has really been kind of leading this and not necessarily new buying. So would like to see another day of solid gains before we get too excited here. And yeah, on the hog side, once again, still, following the cattle on the upside, getting this nice little bounce here. Overall, it's, not seeing too much in cash and in carcass, but some news articles over the weekend that the EU is pretty much detected some cases of ASF in Spain. So there was some delisting of plants. You had China specifically blocking one region. So far, just 2 cases confirmed. So it doesn't look like it's a whole lot to jump on, but so far I think this could send some ripples. So I think you got a little bit support for our markets just based on those articles alone. So we'll see how that turns out. Could be up to 14 cases if the other 12 cases are confirmed. But yeah, it could be a very real situation that ends up supporting our prices down the road. So maybe that's helping this rally as well. But overall, yeah, like I said, just a lot of optimism kind of coming into the day. We'll see if it can hold up and get through some of these more important technical moving averages of resistance.
Very good. Appreciate the update there, Rye. Just came into the open here. We got March corn's down a penny and a quarter, 446 3/4. March soybeans are down 4 1/4. 1141 3/4, and March Chicago wheat's down 4 1/4 at 534 1/4. Now, we appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like and certainly subscribe. Doesn't cost you anything to do so, and it'll keep you up to speed on everything that's going on with AgYield. So again, thanks to everybody that supports the show. We're doing this live every day that the markets are open on X, Facebook Live, and YouTube Live, 8:15 Central Time. Appreciate the thoughts and comments here this morning, guys. It was a good show. Hope everybody has a great start to the week, and we look forward to talking to you again tomorrow.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.